Hey guys, Spartan here from SpartanTrading.com. Today I want to talk to you guys a little bit about some basics on the option side, primarily Lotto contracts. What are they? You've probably heard it before. You've maybe heard that we do something called Lotto Friday every single Fridays that we coined, like a year and a half, 2 years ago. And what that's all about. What are these Lotto contracts? How do they work? Why do people, why do so many people like to trade them, etc. Now, Lotto contracts, what they are, is they can be defined as a contract that's expiring the same day, that is out of the money and cheap. Now, the contracts, why they're so cheap is because they are out of the money on that expiration day, and as it gets closer to expiration, if they're still out of the money, they're going to be worthless. So if we were picking contracts on a Friday that are out of the money, that are worthless at the time or deemed to be worthless in the near future upon expiration at the end of the day on the close, then those contracts are going to be very cheap. Now, what we're doing is we're looking at contracts that could potentially get in the money before the close. So what we're looking at is, the technicals to figure out, what contracts would make sense and which ones would have a higher probability of getting into the money based on a certain setup. Now, something that I do every single Friday and, during the weeks on expiration days for, the SPY, for instance, on Monday, Wednesday, Friday, is I'll look for these types of opportunities. Now, Lotto contracts, let's just look at an example right now. Let's take a look at, I'm just going to move this options table to the side for now. Let's take a look at Shaq. So Shaq was one that we played today. Now, Shaq was breaking out to the upside. You can see the range break to the upside, holding above EMA support, all that good stuff. It actually hit the 200 SMA on the upside, which you can't see because I don't have the 200 SMA up on these main 10-minute charts. Now, let's just say, for instance, I'm looking at Shaq for tomorrow, and let's just ignore that the market's closed. Now, I can see that it's creating a flag pattern to the upside. Shaq's creating a flag pattern to the upside. I would look at the daily chart, figure out how much room the stock has. And in this case, breaks the flag, it's got room, let's say it does have room to 76.44, all right? 76.44 is where it's got room to on the upside. Now, Shaq's already moved quite a bit today. It can move, even more, absolutely, if it breaks and holds above that flag. The next resistance to the upside is 76.44. Based on the contracts that expire tomorrow that I'm looking at here, we can see that there's a few different strikes. Unfortunately, now that I'm looking at them, there's no $76 or $76.50 strikes. So, those really won't work for us. Another thing that we can see is, let's just go back. Oh, there we go. That was sorry, I was looking at the wrong expiration. So we can see that there is actually 76 to 76.50, 77, 77.50 strikes. So we can see how cheap they are. I mean, we got 76.50s, which are 15 cents. 76s, which are 20 cents with high volume that happened today. We got the 75s with high volume that happened today, 30 cents. You can see all these different strikes and how cheap these contracts are. A true Lotto would be something, I'd say 30 cents to 5 cents or lower. That's what I call a true Lotto contract, because if those can get in the money, they can go up exponentially fast. One thing with Lotto contracts is the delta doesn't matter. Don't worry about that. Theta doesn't matter because it's going to zero, obviously, if you don't have it in the money by expiration. But based on what you're looking at on the technical side, what you want to look at is a contract that has a decent probability of getting in the money. And if it gets into the money, it can move, decent amount to the upside. In this case, I'd be looking at probably $75 to $76 contracts. And the reason why is it's got room to 76.44. Let's say my thesis is correct. It breaks the flag, starts to push to the upside. Guess what? Those 75 contracts, if those get in the money, it goes to 76.44. By the end of the day, those contracts should be worth $1.44. From 30 cents, that's a nice and big percentage gain. And that's the power of those Lotto contracts. They're deemed worthless. If they get in the money, they start to move. They can go up exponentially, and you can make that, those big percentage returns. So that's kind of the thought process behind them. That's how they work. Obviously, this is just a quick little example for you guys, but hopefully that gives you a little bit more insight into what Lotto contracts are, what we do every single Friday on Lotto Fridays. And if you guys do want to join us, you can visit www.spartantrading.com and obviously look to sign up for the day trading stuff there, because that's what we do every single Fridays. But yeah, just a quick little explanation for you guys. If you do have any questions, feel free to reach out to me directly. I can answer your questions there. And yeah, that's it for today, guys. Thanks for watching, and I'll talk to you soon.